Welcome to Shet Vidya Mandir online lessons and partnership final accounts. Today we shall do the most important part of final accounts, that is the adjustments. Now what are adjustments? Adjustments are the additional information, that is some extra information relating to accounts given outside the trial balance. Now see, after the trial balance is prepared, but before preparation of final accounts, there may be some additional information which is acquired by the accountant, and this information has to be shown in the final accounts. So this information, this extra information relating to accounts is known as adjustments. So while you are preparing final accounts, it has to be shown, okay? It has to be, all the adjustments have to be shown in the final accounts. Now the most important point which you must remember is that every adjustment has to be given two effects. As all of you know, whenever the trial balance is given to you, all the items of trial balance are given only one effect. But adjustments have to be given two effect. If you give only one effect to adjustments, then your balance sheet will not tally. Your sum will not be correct. Alright, so one by one we will see all the important adjustments. Okay, so first one. Now this is very important. All of you know closing stock. The stock of goods which is lying with the business, which is there with the business at the end of the year, is known as closing stock. Alright. Now many a times closing stock two values are given to you. One is cost price and one is market price. Now whichever price is less, whichever is lower, that has to be considered. Now what are the two effects of closing stock? One is trading account credit side, you will write buy closing stock, and balance sheet asset side, you will write closing stock. Alright. This I guess all of you know already. Outstanding expenses. What is the meaning of the word outstanding expenses? Expenses which have not yet been paid are known as outstanding. Alright, it can be outstanding rent, outstanding salary, outstanding wages, etc. Alright, so what you're supposed to do is you have to add it to the expense in trading account or profit and loss account. Now suppose you have outstanding rent. Rent goes in profit and loss account, so you will add it to the rent. You will write add outstanding rent in profit and loss account. But suppose outstanding wages is given to you, then where does wages go? Trading account. So in trading account you will write to wages add outstanding wages. Alright, and the second effect, outstanding means which you have not paid, so that is your liability. So balance sheet liabilities side. Alright. Next is prepaid expense. Expense which has been paid before the date, which you have prepaid. Alright. So it can be insurance, you can have prepaid insurance, you can have prepaid advertisement. So what you're supposed to do is, this is extra expense which you have paid, which you shouldn't have paid, but you have paid anyway. So you have to deduct the prepaid expense from that particular expense. So deduct from the expense in trading account or profit and loss account. Alright. And the second effect, you have paid extra, that is your asset. So that will be shown in balance sheet asset side. Alright. Next, income receivable. Income which you have worked for, which you have already made the sale, you have already done the work, but you have not received your income. So that is your asset. So one effect will be balance sheet asset side. Other one you have to add to the income in profit and loss account. Okay, is it clear? Two accounts, in profit and loss account credit side you will write buy whatever is that income, and balance sheet asset side you will write income receivable. Next, income received in advance. You have received the income in advance, you have received the income before it is due. So you have not done the work for that, but you've received the income, so that is your liability. Okay, so balance sheet liability side you will write income received in advance, and from the income in profit and loss account you will deduct from that income. So one effect is deduct from income in profit and loss account credit side, other effect is balance sheet liability side. I hope it is clear. Next is depreciation. Now all of you know what is the meaning of depreciation. In class 11 we had a chapter on depreciation. Depreciation is nothing but the reduced value of asset, the reduction in value of assets over a period of time due to wear and tear, and many examples are there in that. Now what you will do, depreciation is loss to the business, so what you will do, profit and loss account debit side. And the second effect, balance sheet, you have to deduct depreciation from the concerned asset. Depreciation could be your furniture and fixtures, your motor vehicles, your plant and machinery. So you have to deduct from that concerned asset. Okay. Next is interest on capital. All of you know what is capital, what is interest on capital. Interest on capital is expense to the partnership firm. So expense to partnership firm, that's why it will go to profit and loss account debit side. And in capital account, you write on the credit side by interest on capital. So you have to add it to the capital account or current account in the balance sheet. Next is interest on drawings. All of you know what is drawings, what is interest on drawings. Now interest on drawings is income of the partnership firm, it is not expense. So profit and loss account credit side. And in the balance sheet, on the debit side of capital account, you have to write interest on drawings. So deduct from capital account or current account and show the balance in the balance sheet liability side. Unrecorded sales. What is the meaning of unrecorded sales? Some sales has taken place, but the entry has not been made in the books of accounts. Okay, so afterwards it was realized that the sales were made. So you have to add it to sales. Go to trading account and add it to the sales. And next is you have to add it to the debtors. In balance sheet, you go and add it to the debtors. Unrecorded purchases. Same thing, purchases, you have purchased goods, but the entry has not been shown. So you will add it to purchases in trading account, and in the balance sheet, you have to add it to the creditors. Okay. Goods taken by partner for personal use. That is nothing but drawings, personal use. So what do we do with drawings? Same thing you have to do here. So first trading account, credit side you will write buy goods taken by partner for personal use, and in the balance sheet you will add it to drawings. In capital how you add drawings, like that you will add this also. Goods taken by partners for personal use. Okay, so this was all adjustments for today. There are few more adjustments which we shall do in detail in the next video. Take care. Bye.